So one example that I think is kind of representative of some of the differentiated sorts of stocks that you find in Axiom's portfolios is Trex, which again, it may not be a household brand name that fits into that niche category, but remember, 65% of our portfolio. So, people always look at the top of your portfolio, the large cap stocks that show up at the top, and those are important, and it's important to get those stocks right. And we certainly have a number that you'll notice that are impactful stocks. But over half of our portfolio, in fact, nearly 2/3 of our portfolio are these niche and differentiated companies. And Trex is, I think, a typical example. And I think it's one of the reasons that not only do we provide an interesting expression of ESG and of helping to make the world a better place, but also differentiated alpha. So Trex is really, as you can see, the world's largest manufacturer. So they're number one, but they're number one in a niche. So as we'll talk about in our rating system, that makes them a niche business. So they're the number one maker of composite decking. So many people are now aware. We've owned the stock now for about a year, but so everybody's now aware that lumber is in very tight supply, and that there's a global shortage of lumber, and that there's this phenomenon that's going on as a result of COVID, particularly in the US, the UK, and a number of other countries, and people really focusing on improving and upgrading where they live because they're spending so much more time at home. And it turns out that lumber is actually, as you can imagine, not necessarily the best product to use for exterior applications because it deteriorates, it goes without saying, and you have to constantly maintain wood. And so a better way to kind of construct some of these exterior outdoor spaces is to use what's called composite decking, which is essentially made from recycled plastic. So in addition to providing a better product, Trex is also an incredible part of solving a terrible environmental problem, which is what to do with waste plastic. They're the number one recycler of waste plastic in North America, and they make it into this incredibly functional decking product that, because it doesn't need to be constantly maintained, has a total cost of ownership, which is considerably lower than wood. So their traditional product, the one that historically fueled the company, was a very high-end product. It cost about more than 10 times as much as wood, but because you didn't need to paint it every year, it paid for itself in 5 to 7 years, depending on where exactly you lived in the country and the weather and so on. One of the things that really attracted us to Trex, and one of the things that was interesting to us, is they sought to launch a lower end product that could address the mass market, beginning about 2 years ago, that had a lower purchase price, about half the cost of their high end product, and it made the addressable market much larger. So just briefly, I won't dwell on it too much, but it's important to understand what the company does. Currently, only about 20% of the market is this composite decking, and it's partly because it's so expensive to buy up front. So the company launched this new product to address that kind of mass market. We owned this company actually in our small cap funds, and we'd owned it since it was below a $5 billion company. And one of the things that really interested us in the global portfolios last year is Trex was going through a little bit of teething problems as they launched this new product. It's actually hard to make. There are a lot of issues with just product quality, and so the stock was going through a little bit of a soft patch as they were struggling to get this new product introduced. But we could see the market potential, and they are the market leader. They're number one at what they do. They have a 50% market share. It's a very highly regarded management team, a very deep management team. And so we viewed the issues they were having scaling the new product as a potential opportunity to expand the use of this company. The last thing I'll say before I dive into it just a tiny bit is it also shows the power of Axiom's unified approach to investing, because it means that a company that's covered by our small cap US team can easily be integrated into our global framework because they're rating and ranking all of the information in exactly the same way, which brings me to what you're looking at here on page 13 on the screen, which is a snapshot from those Axware entries. So I mentioned Axware, the database, 3,500 plus companies, proprietary, million plus data points, over 100,000 a year, everyone color coded, all shared. So I have this screen. This is a screenshot of a screen that I keep on my desktop open all day. Everybody at Axiom does. And we have like a running flow of all of the fundamental data points, each one of which is entered by one of the fundamental analysts. So if you look closely at what's on your screen, see that a lot of different people are collaborating. So it's a shared tool. If you look under that user column, you'll see different initials. Those are different members of our investment team. So we're all really collaborating in a unified way. You can see there's a score that's color-coded red to green, so that's good to bad. That's a fundamental analytic score that's discussed at our morning meeting, so you have to defend that score. And then there's detail on why that score is merited. And to get a green score, you have to be tracking essentially 10% ahead of expectations over a 12 to 24-month time horizon. And then there are different categories of information. So it's a holistic, it's a robust approach, everything from conversations with management to news flow in the industry to bespoke kind of contacts within the industry value chain. And all of those things were indicating that the company was beginning to turn around this new product cycle that could really drive accelerated growth for the business. We have a similar kind of monitoring process for what's happening in the macroeconomic data in 100 countries around the world, including obviously the US. We're scoring all of the growth, inflation, and national balance sheet indicators. So we were seeing very early on in COVID, the acceleration in consumer spend on home goods. So we could see macroeconomic tailwinds, we could see microeconomic tailwinds. We have a robust kind of perspective on the enterprise, and all of these things supported the critical point, which you see in that operational acceleration list there. The company was tracking for more than twice the growth that analysts had embedded in their medium-term forecasts. That's what gets us excited. A high return, highly cash generative market leader showing an acceleration in their business with a sustainable tailwind for a period of years as they roll out this new product. Maybe just moving forward to a couple other points. So that's idea generation, how we leverage the whole team to achieve that with some pretty differentiated tools. Obviously, having said all that, we need to take a deep dive on all of the different drivers. I mentioned our ratings framework, and I mentioned that we have a very structured process. So you can see on the right-hand side of this page, on that return rating, that was the 0 to 3 rating, we go through in a detailed way 20 different factors. Every single time we talk about a stock, we go through 20 different factors, about a third of them related to positive change, a third related to sustainability, and then a handful related to valuation. And we score each of those elements based on consistent set of data points, 0 to 3, to ultimately arrive at a return rating for that stock. We have a similarly structured approach to the risk rating. I mentioned there are 4 categories of risk. Again, you can see those categories: the enterprise risks, the financial risks, the ESG risks, and the statistical characteristics. Again, a consistent set of 20 factors that we're evaluating in order to arrive at that score, ultimately to conclude that this was an attractive risk and return. As we'll see in a moment, a C2 rated stock, which is a good niche business with a lot of upside drivers and reasonable risks relative to those upside drivers, and specifically a very attractive gap between what people were forecasting and what the company was achieving. So maybe just moving forward, a holistic approach to risk and return with regard to the ESG, because this is an ethical fund, and we get a lot of benefits, I think, from the ESG component, not only of the risk analysis but the return potential. And as you can see here, this is even though it's a smaller business, at the time we were advancing it into the global strategies, it was about a $7 billion market cap. Now it's more like a $12 billion market cap. So it's obviously done very well. But looking at each of the different elements of ESG, their approach to governance, capital management, the reputation and depth of management, the incentive alignment, the social, the environmental risks. We even look at the country risks. So some of our businesses are competing in countries that have say some challenging dimensions to them. And so we take a deep dive and really make sure that we're not taking inappropriate ESG risks. In this case, I think actually it was an attractive stock with real tailwinds from particularly recycling and this issue of how to recycle plastic. Just moving forward. Ultimately, what that means is, this company really fit within our target zone, our risk and return blue zone, where we really want to populate the portfolios. A niche business, so typically that's about a 2 to 3% position. Ultimately, we build them up gradually over time, and again, on an ongoing basis. Just to kind of conclude the example, if you just roll forward one more slide. Every day, literally every day, I'll just say that it just happens. This wasn't planned, but it just happens that Trex reported earnings last night, so we saw their earnings overnight, and they once again put up a near 10% earnings surprise. They actually guided earnings up going forward. But really, every day we're ranking information on all of our holdings, and Trex is just an example. So we can continuously look in Axware. We can see all of the different data points that relate to the investment thesis. You know, what's happening with this new capacity that they're bringing on, what's happening with consumer demand, what's happening with the competing products, the price of lumber, you know, their competitors' composite decking, what's happening with contract signings with the, you know, the retail distribution channels. And so we can continuously reconfirm that the investment thesis is on track. And as you can see, if you look very closely, we also, over the holding period, typically experience investors really appreciating the ESG components of the companies in which we're invested. So in the middle of this sort of list of monitoring items here, and it's pretty recent, you can see that MSCI, one of the leading third-party rating ESG rating agencies, actually raised their rating on Trex to an A rating stock, an A-rated stock, reflecting the importance of what Trex is doing to improve the situation with plastic waste.